is top of mind, Adam, for you right now? I mean, we're looking at the intervention story around Japan. It's huge for the FX markets yesterday. Oil seems to be a little bit better behaved right now, even though President Trump is saying that he continues the blockade. The Japanese suggesting they might intervene in the oil markets. The strategic reserve has been tapped. What, for you, when it comes to the oil story, the FX story, is top of mind right now?
I think it's definitely the FX story. I mean, obviously, a lot of European markets are closed today, so that definitely factors in. I think in terms of dollar-yen, what yesterday achieved, if anything, was potentially a bit of a line in the sand for 160. But in terms of that, I'm still cynical about how much impact this intervention will have. I mean, yesterday, when we saw the moves, a lot of people were saying, is this actually intervention? Because historically, they do look relatively muted, and we're actually seeing them kind of reverse a bit today. The big problem for the yen is it was struggling before the conflict, and now it's having the effect of higher energy prices. It's a net energy importer. If that keeps the BOJ more cautious in hiking rates, then you get real rates, they remain negative, and that poses a headwind to the yen. And also for the dollar side of the equation, historically when intervention has been successful, you've needed a softer dollar. You know, we saw that in July 2024, but we're not really in that environment at the moment. You know, we saw the inflation data yesterday. And, if the US is to, potentially step in with Japan, that would obviously be of note. And, it depends on the framing of that, whether this is a wholesale reappraisal of their dollar policy. That would be of note. In terms of, potential oil intervention, I don't really buy that, to be honest. I mean, the big problem is, obvious one, is the Strait of Hormuz is closed. Is Japan really going to turn the tide for Brent and, global energy markets? Probably not.
How do you price in a policy mistake from the ECB? What if they raise rates and the market perceives it to be a policy rate? Do I just sell the euro? Is it an inverted? What does the curve look like? Just talk me through the reaction to what we got from Lagarde yesterday, because Lagarde's pointing to a rate hike from the ECB.
She's pointing to a rate hike, I think, but not necessarily a series of them. I think she was careful to note that longer-term Eurozone inflation expectations are relatively anchored, that five-year that we spoke about yesterday. In terms of parallels, people are pretty happy to draw one between now and 2022, but the real one is 2011. So we saw the ECB, they hiked rates by, 50 basis points, and that was, a similar backdrop. We've had this commodity-led supply-side inflation rise, and that was kind of what got them to pull the trigger. And then, as we all know, 4 months later, they reversed course and basically back to square one. And if you look at the German two-year yields over the course of 2011, we saw this run up similar to what we've seen, and then we saw this kind of fall off later in the year. So if that's if you do get a policy mistake, that's probably what you're looking for.
Is the BOE setting itself up for a policy mistake?
The BOE was definitely a lot less clear yesterday. I said yesterday we get a lot of this information, which would be good, but if anything, it did, kind of muddy the waters a little bit. We've got an incredibly fractured MPC. We don't know exactly where they stand. I think the BOE a bit more circumspect. I think with the scenario B, which they appear to be leaning to, they definitely see the case for more muted second-round effects. I think the BOE more cautious and potentially less likely to make a mistake.